Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hey, Mr. Felix, 5,000 subs. Man. We got it.
Yeah, that was good, huh?
Yep.
That's good.
First big milestone. I'm happy about it. Thanks, guys.
It was very it was exciting. It's exciting to get more and more people on and just talking options and talking stocks and doing what we do, trying to read the tape for it. So,
yep.
That's a big thank you to everyone. Let's let's focus here a little bit. I when I wake up, I first go to CNBC. I get excited, and then I go to Zero Hedge to kind of bring me down, meet me somewhere in the middle, and then start looking around for other articles. And I can't help. I had to actually dig for a few articles that I saw over the last week and even the last couple of weeks, and I sent them to you so you can put them on the screen for people. But I wanted to walk through a few. It's things that we've been talking about, but now you're really starting to see. Chipotle's another one today, but McDonald's workers set to strike for higher wages ahead of shareholders' meetings. You're going to start to see, and it goes to a bigger picture as well, not just higher wages, but when people are now the focus has become higher wages. I think the federal government has a bigger problem. Over the last, call it, couple of years, the United States has been not so united. It's been somewhat divisive, whether it's racial tension, whether it's male versus female, there's a lot of different things going on in the world. And but when you talk about food and eating and wages, to eat food, it might be the thing that unites us, right? It might be the thing that, hey, everyone's trying to work hard and just trying to make a living, and the corporations are making the most money here. And so it might be something to really start paying attention as to sort of the dynamic of what's been happening. Conspiracy theorists will tell you that the government's trying to create all these false flags. They want to divide the country to make sure that they can do what they want to do and impose their will. But maybe wages and something like inflation, an increase in inflation, which it's very hard to control. An increase in inflation actually gets the United States united again, all for one cause, to say, hey, man, we need to make some money too, right? Yeah. So I think it's an interesting dynamic that's happening, because it doesn't matter who you are, male, female, black, white, Asian, Hispanic, it doesn't matter. We want to get paid more. Right. We're telling the corporations, we want to get paid more. Big step. That's a big deal. So maybe that's a positive thing out of all this. Maybe that's the thing that people say, you know what, why are we fighting against each other when at the end of the day, we're 350 million Americans, and there's only a few people controlling the top parts. And at the end of the day, we have, just like when Obama came into the presidency, and 20-something-year-old kids and African-American community and basically the people that voted for Obama realized that, hey, you know what, if we vote, we can vote whoever we wanted, and the power and the people is really what made the United States special over the course of time. And so maybe we get back to that. And maybe inflation is maybe it's bad for certain things, but in a way it might actually unite us. So I think, I try to look at it the positive side as well and say, how am I looking at this? But you're starting to see headlines like this. You're hearing about Chipotle. This is big news. This is big stuff that you have to start paying attention to. Higher wages, unfortunately, decreases margins for companies. So, that's probably a negative for the stock market if the world could get paid more, if the United States world could get paid more. I look at something like this, and I thought this was cool. It was, an article talking about visualizing what $50,000 in lumber can buy today versus just last year, right? Just last year. So they have the numbers here. Last year in May was almost 15 homes you can build. And today, or May 5th, it was only 2 homes. And they gave you a little visual here to kind of see it. And I thought that was really interesting. And this is your lumber futures. This is the price of lumber over the course of, 2000. This is a big graph going back to, they do this to create this, but it's still a significant move from a decade ago. So a decade ago was here, and now we're up here. So again, inflation, is it transitory? What's going on here? I think this is a big move from cities to the suburbs. People buying homes, getting out of apartments in a city and moving out to suburbs, a little bit safer, away from, people realize what could happen with something like COVID hitting. You're having a lot more crime rates in the bigger cities rise. People are saying, you know what, I'd like to go live in a more peaceful environment out in the suburbs. So that is a trend that's going on. But you see that, and obviously that causes prices to go up. Another thing that I'm thinking about, because I'm trying to think about, we talk about this chessboard, and the chessboard is, this is a 30-year game, 40-year game, where it's the United States, it's China, it's Europe. There's a lot going on in the last 30, 40 years, and we're talking about a power chess game. And I put these things out to simply, I don't read articles and then say, oh, I believe everything. But what I do is I try to take the facts. What are the facts? The facts are this. And then we can talk about whatever we think the facts are, and we can take into account that maybe this person's trying to lean us one way or the other. So one thing that I saw, as part of this chess game, and the end game, if you will, the checkmate is really, when you're talking about the superpowers, China and the United States, the checkmate is, I've always said this, I've been saying this for literally 8 years. So I don't think it's going to happen tomorrow. I don't think it happens in the next. This is a long process. This is the end game. The end game is, the U.S. dollar. The U.S. dollar is the world currency. The fact that the U.S. dollar is the world currency allows us to have great power around the world, and I think that's important. I think it's important when when you're looking at the way the dollar moves around. When you're looking at oil, the petrodollar, and there's a lot of books on that. In the 1970s, US dollar, petrodollar, they were tied together. That has been a big boost for the United States, the United States dollar. Some of those ties are weakening over the course of the last 5 years. You're seeing China and Saudi Arabia getting ever so closer. Russia, you have Iran, even Korea, North Korea. There's a lot going on in that side of the world where payments, believe it or not, payments it's a big deal. So payments and how they get from China to the United States, and from the United States to Russia, and from Russia to Saudi Arabia, or however the payments are going, how they get those payments done and being the world currency, there's a system in place, and that system is very entrenched. And to undo that system, again, is a long process. Part of undoing that system is things like this. Russia is prepared to disconnect from SWIFT payment system, says the foreign ministry. Okay, it could be saber rattling, and it could be things that, they're just saying it. But at the end of the day, over the last 15 years, you've been seeing more and more of these types of statements and actual movement. So if you look up on Google, if because you want to see facts, you can look up China-Iran swap agreements. Swap agreements are agreements, again, making it easier for money to go back and forth that doesn't have to go through a US dollar-based system. The SWIFT payment system essentially is probably run by the CIA, is probably a US government monitored system. Okay? Right. I think it's out of Belgium. So things like this, and this was only a few days ago, when Russia starts talking like this, and you can hear what they're saying. This is quotes. I don't even know if they're making it up, but I'm assuming that the quotes are, I'm reading what they're actually saying. It's interesting. It's interesting to hear how they're thinking about pushing their own payment system. So payments is a big deal. Okay, so we got the food thing. We got payments. Here's something else, that I pulled up from it was a while back, but it's sort of, again, this is a chess match, and we're looking how the two big superpowers are playing this game, right? China is building up its ability to weaponize trade, and it basically talks about commodity. They spent all of last year buying every commodity in sight. We've talked about it, right? They bought every commodity. That's why there's the prices in things like copper and things are going up huge. Yes, there's a need for EVs, but and all the and everything else that's going to be built. But China is a big buyer of this stuff, and they were actually selling bonds and they were buying commodities. Okay, if they, Australia is a big area where there's oceanic areas, Australian and Fiji Islands around there is a big area for just for metals, gold, commodities in general. And you can see the lines here. This is 2000 to 2020. So again, 30, 40-year chess match. Look at China just taking over all of these different companies out there. And look at not forget about the rest of the world. Look at the US from 22 to 10. So China is just getting a larger piece of the puzzle. Okay, again, chess match. Right, they're cornering the system. Right, they're buying the companies, they're buying the actual commodity, they're increasing their supply, they're making sure their supply is okay. There's other articles about them going towards Norway and stuff, which is closer to where the Antarctic. And this is again I can't say it enough. It's a long chess match. When I play chess, there was a point where it didn't. Each game could go for 3 hours. This is interesting. And by the way, everybody should watch the Netflix movie or series with this young girl playing chess. It's awesome. It's really, really good. And it's not about chess. Chess is the background. It's just a good story of her path. But when you're playing chess, it's a 3-hour game, right? Hour and a half. And it's funny because after the game, you're exhausted. I mean, just as you're playing, you run a track meet, playing football, you're exhausted, mentally exhausted. And, when a person makes a move, the way you're playing chess is you're starting to see, 5 moves. The better the chess player, the more moves ahead you can see. You're seeing 5, 10, 20 moves ahead. And, I tend to look at the world like I play chess when I'm looking at this and I see these moves and I say, man, China has, potentially cornered us. And my only thought is, are we actually at war with China already? This is the early stages of, China saying, okay, we're going to weaken you until we want control, we want power. Sun Tzu, The Art of War, there's so many lessons you can learn there. It's a great book, but they wrote the book on war, right? On the mind games and how to play it and how to play the long game. So you're looking at this and I'm seeing, okay, fact, coronavirus comes out, decimates our health system, decimates our middle class. Okay. In the meantime, fact, China's buying, as much commodities as are in the world as possible. Fact, they're also selling bonds, right? Taking their money out of the US dollar. Okay. In fact, they come in to start buying bonds again, for the first time in January. And the thinking is strategy. We don't want things to crash just yet, right? It's a long game. We don't want it to crash. We just want to weaken. Right. So the fact they buy that, then they stop buying a little bit now in April. And again, you're seeing commodities just keep going up. So, this whole chessboard, if you will, is taking form. Now, the government, what is the US government doing? The US government is basically flooding, seemingly flooding the market with US dollars, almost without care, almost as if it's, nothing to see here. Oh, you want $1 trillion, $2 trillion? Why not make it 6 trillion? It's scary how fast they're doing this without even a thought as to, the ramifications. You're hearing, and I have a Wall Street Journal, it was a Reuters report. The article is here, U.S. bonds in China, and I'm just giving you the title here. It talks about China unlikely to wield U.S. bond weapon as tensions stay high. Okay, so they're also in the article. It talks about, China has this weapon. They basically will long so many of our bonds, and I had to laugh because I'm reading it, and it's basically saying either way, it's just not a weapon China can use easily. China only owns about 5% of treasuries, so they can move the needle, but not much more than that. And again, I laughed at that, and I'm thinking to myself, outside the box, to say, that's great. They're excited that China only owns 5%, and they can't wield enough power to really destroy the treasury bond market. But they've already done the damage, right? They've already forced. The only way China could be 5% was because who owns the most treasury bonds? Basically, our children, right? The next generation is the lender, right? We actually have to pay for these bonds at some point. So at the end of the day, we have borrowed our own money, and we've weakened China's stance for their bonds, but China has taken that money. They weren't dumb. They took that money and they bought all the commodities in the world. They've been buying every commodity company in the world, and they're pushing. So it's this, the way I look at it again, it's if I'm on the U.S. chess team, I'm looking at it going, we're getting squeezed. We're getting squeezed. You could see 20 moves ahead, and they got our sides cornered here. What's the answer? What is the answer? Sometimes the only answer, when you're playing chess and that looking at the board and 20 moves ahead, I'm looking and going, I wish I could take the board and just literally throw it. Just, say, hey, let's start again. You can't do that. There's no do-overs here. So, this is it's an interesting way that we're going, but I hope that people can look at it at the world and on their own, and they could make their own decisions and think about where we are, what we're doing. The government does need the market to keep going up. It does need that. So that is the answer on where's the market going. I don't know. It's very dangerous situation, but I do know if I'm playing the game of chess, on the U.S. team, I think we need the market up. The market can't crash just yet. Like, we're not ready for that crash. And then the next question is, well, how do we keep it up? Well, we keep pumping. But if we keep pumping, then we'll have to deal with that problem later on, because right now we're trying to make sure things don't completely get off hinge. What would get things off hinge? We're also trying to not get, I hate saying these things like, and I don't say it like it's a 50-50 chance. It's probably a smaller chance. But to me, if you look back at history, revolutions start with food, and it's a little scary to think that food prices are going up so much. The last article I'd show you here is, I had it somewhere, but I missed it, where basically, food prices are going up, and what happens if food goes up by 40%. So, historically, food has been a big spark, if you will. It does unite people. It doesn't matter race, nationality, male, female. It doesn't matter. Food is a unification spark for people. Right. And I think it's important to realize that. Just go back in history and see that. So I think that China's is got us in a good spot, and maybe the government says obviously we want to think that we got them in a good spot, but I don't know. It's very difficult. So I invite you to read a lot of. I look at what's that show with Carrie Mathers, which is Homeland, and she has this board of all the different people that are involved. It's like, instead, just take newspaper clippings and start putting it together and put the pieces together and say, man, this is an interesting sort of dynamic that's going on here. So with that, let's go to some UOA. That's my worldview for a second, and tell you that underneath the hood, there's a lot of issues, but the main goal is that the government does need the market up, and they'll do whatever they have to keep the market up for right now. At some point, they will let it go if they're ready to catch it at a lower price. What are we seeing today? One thing that I did see was, and we have talked about in the past, was ad nauseum, is these names. I looked at it today because XPEV has earnings coming out this week, right? So XPEV, which brings in LI, Lee, NIO, and then we got a question to deal with Tesla. So let's look at some of these names.
Yep.
And I saw something in LI, so we're going to start in LI.
I think it was.
LI, right? LI is China. Lee, I guess you would call it Lee. We've been talking about it for a while here, breaking these levels. It's the market here. We can draw our lines, and this is obviously one line that is just not so good. We had our lines really up here first. We were looking at sort of this level here, even go over here, right? That was a level we were looking at, right? Where we're trying to hold this and break, hold here, hold, it breaks. This is trying to find another level where we were saying right around here, right? Just kind of like eyeballing it. And then we basically said this was sort of these last two levels right around here, call it 14 and a half, $15. So we're here now, right? We were at 25 when we were doing these things, saying, there might be buyers. People were selling the 20 puts in Lee at around $4, which means they'd be buyers at 16 to this range again, 14 to 16, they would find value there. That was the clue that they were saying this. And look, we're pretty damn close. You have this XPEV coming out. Let's see this one. XPEV coming out this week. Sorry, let's look at the daily. Same type of chart. Again, a big level here. We're looking at these same levels. It's not going to change. So we have this level right here. So we have it a high here. We have a ramp right through here. They protected it here, and now we're at this level again, right in front of the number this week. Where can it go? You know, if I'm long the stock, you know, I guess you have to be worried about 17.5 and $20, right? 17.5 and $20. Again, we've been seeing put buying since around here all the way down. This is a straight line. You could see straight down. You know, these are tough. These we're below the 50. It's a tough long here, you know, and we should be thinking about. You know, like we've been saying it before, think about using options to try to protect yourself if you're long, or to take a shot, you know, on the long side, or maybe switch from stock to options. Let's take a look at, because we saw something here in, let's just look at this here. Look at what they're doing here in Lee. So we're looking at the May 28th, which gets you earnings. So for earnings, they're buying the 15 puts here. Buying 15 puts here in May, and they're paying 30 cents, 32, 36, eventually up to 40 cents, 42 cents. So, you know, what do you think? What is somebody paying 40 cents for these things? You know, they got to be thinking something like $12. And if we go back to Lee, $12, that's well below where we're thinking. So, you know, I mean, can it get there? You know, why not? Remember, we're looking at tops. Let's remind people what we're looking at. Okay, so here you go. I want to remind you of this, right? See this right here? This is the top area. Let's just move that down to sort of the volume.
Right.
See how we have this high volume, you know, on the top? Well, when it's the low, when it's the end, then you should have this type of volume on the low. It should go high volume top, and then also on the low, you should start seeing this higher volume type of trade. Usually that's how it ends. So, you know, can it get to $12? You know, why not? Why not? So that's in Lee. We want to point that out. We also want to point out, because we see in XPEV, XPEV, I didn't see that much, but in NIO, let's take a look there, because I spotted something there as well. You're taking a look at like June's, a little bit further out than the daily stuff, but take out June. Let's see here what I have. June's, was it June's? Was it May's? No, sorry, May 28th. May 28th. So May 28th puts here, and you're seeing these, you know, someone come in and buy these in the morning where they were buying 87 cents kind, and let me just do it this way. 83, 87, 81. These were coming in on the offer with volatility going up, buying it here, here, and here. So, and they're buying the 32 puts. They're paying 80 cents. To pay 80 cents for the 32 puts, you know, you got to be, they're thinking 27, right? And we've done the graph in NIO before, but we'll do it again. It doesn't change. Our price is not going to change sort of what we're looking at in our levels. And I think it's not rocket science. It's pretty clear, right? This, for whatever reason, this is a level right around this 34 we've been saying. Okay, let's just call it right around here. And this is a level right here. We had this downdraft from here to here. We were looking at this before. It didn't seem like that was it. The 50-day held it. So maybe this becomes this flag. Okay, but whenever this decides to go up, usually what happens is you see this. Remember, we're looking for that sort of V trade, right? And then we're kind of looking for it to hold, right? We're looking for a move up and hold. Okay, you know, let it hold for a week, 2 weeks. It's not the end of the world. You'd rather watch it hold and miss a couple of dollars on a move that moves it back up than really trying to pick the bottom here and chase every up and down. These things are going to have, these are 30% moves up and down. They're big moves, okay? Because the stock, it doesn't have to be up here, but it's these are significant moves up and down that hurt people. So this is a big level going into NIO. They're buying May 28th puts. They're buying the 32 puts. They think it can go to, if they're buying the 32 puts, they think 27 and a half, which gets you right here. So
Yep.
Is that possible? I mean, it looks possible to me. It looks possible. Frankly, this also looks possible. Talking about the 20, and then you got another gap up here. This is already now down to 15. I mean, can it get there? Again, look at the volumes, look at the pockets of volume and where people are. They bought here, they bought here, on every one of these big jumps. Again, this is where the biggest volume is. Okay, right around this level, traded a little bit higher, and then it's collapsed. So when I see this has to be somewhere around here. All right, going that way a little bit further. We see this volume. If there's a low here, and if this breaks, we're thinking about if this breaks and it starts to come down here, you should start seeing this type of volume. Okay. Right. And that's what we're looking for. So when people saying, well, what's the low? What's the low? I'd like to see this volume first, or I'd like to see it recoup sort of up to, this is again, same thing. Instead of buying it at 35, and we're talking about if somebody wants to hold this for 5-10 years and that's what they're playing for, they can start buying whenever they want. But most people, in my experience, most people are not 5-10 year holders. Okay. Right. They're in it for, if it's going up and maybe they'll take some off and whatnot. Most people are not 5 years holders. And so if you're looking for a move back to sort of the 67 range, 65, 67 range up here, then, I'd rather buy it when it shows me this right here was good. I'd like to see it recoup 42 and a half. And then I would say, okay, it made this high over this. See, this high went above this high. And if it can now move back up to 45 and hold, well, then we have higher highs and things are starting to look better. The bulls are starting to take control. The buyers are starting to take control again. But until you see that, what you're looking at is a rejection, the 50-day moving lower, the 200 days not even rolled over. This will take 3 months for the 200-day to start going down this way if it does, and who knows what happens. So that's the way I look at the world. That's how I see it. When I see 32 put buyers in this, I see what they're looking at. It's an interesting play. I like the play because if this breaks, you could have a massive move down toward the low 20s.
Right.
Okay. All right, good. So that's it. Of course, the EV names leads us to what? To Tesla. And we had a question that I thought was interesting. So, people ask questions on the comment section, and I try to answer most of them. I try to engage people, but this one needed a little bit more explanation. Now, the person said, do you have the question there, Margot?
Yes.
So the person basically said, well, he gets a question. He basically asked about a gamma squeeze setup, and he thought that people were long Tesla basically because there was this gamma squeeze or potential gamma squeeze. And that is possibly true. That's part of the story. I think it's important to understand the way the gamma squeezes work and the logic behind it and the danger. So gamma squeeze, I think most people now are aware of a gamma squeeze, and they know that calls are being bought up higher. Let's call it, let's take a look. Let's take a look at Tesla. Let's look at Tesla here. So I want to go here and I want to look at Tesla. I'll try the 750 to 900 calls. I just want to see what's out there. Okay. And 750, let me go all the way out there. Okay. So these are all the upside calls and the open interest where people bought. So the statement was, do we have it yet? Or you get it? No.
Yep,
I
got it.
Okay. What was the question? Why don't you read it? Read the question to me. I can't read it.
Okay, invaluable content, guys. There are suggestions Tesla stock is held up by out-of-the-money calls. Is that possible, and how? Please explain. Cheers. Keep it up.
Great. Okay, so Tesla out-of-the-money calls. So here's some out-of-the-money calls. You see 15,000, 30,000, 20,000. You go further up, 22,000, 26, 850s, and you see 23,000, 13,000. These are little baby calls up there in June. Still, have probably a couple of bucks here and there, and we can look at the pricing. But this is basically the open interest. 23,000, 2.3 million, 2.6 million, 2.2 million. We got 1.1, 2, 3 million. So basically in June is where I'm seeing the most sort of open interest. You got, call it 1 million here, 2 million, plus 3, 5 million, 7.6 million. Let's call it about 10 million shares up to 900. Okay. Is that fair?
Yep.
10 million shares. So the question is, people buying these calls, and the way a gamma squeeze happens, you set up the calls, you buy at the calls, and then people think that it's going to cause this move up. Okay. Not exactly. There's several parts to the gamma squeeze. So basically the setup is to buy these calls up here, up top. Okay. That's one. When you buy them, I'm selling them to you. I'm the dealer. So I'm selling them to you. Now, by me selling them to you, I actually have to do what? I have to buy some stock. Or I could buy some other calls that are a little bit closer, right? Because when I'm buying calls, that helps me with my gamma position. Me long gamma helps me with the gamma position. But eventually somebody is going to be short this gamma. Okay. You're going down this long tree. I'm buying stock to protect against moves all the way up. What the gamma squeeze needs is someone to go in there and buy the stock, or it needs a positive news announcement. Like, for example, say Tesla announces something about a battery and they've improved and they come out with something new. And all of a sudden the stock just immediately jumps up 100 points from here, 150 points, gets to 750, 800, just on the news. Okay. That then causes me, the dealer, okay, to actually have to buy stock to basically cover my what's called deltas for this options position. The percentage probability of Tesla now going to 1,000 is a lot more than it is today, than it was yesterday. Okay, with this new news, so I have to reach and start buying a lot of stock to protect me reaching to buy millions and millions of shares, just paying the offer and keep buying it, and other people who are short buying it. That's what causes the squeeze. It's not necessarily the buying of the calls that causes the squeeze. It is the buying of the calls and some push, if you will, up. Okay. Now, what I'd like to say is that gamma, which is this gamma squeeze, gamma is leverage. Gamma leverage is a double-edged sword, right? And so what could happen? Well, if I am also, you have to think about it the flip side. If everybody buys calls, which they bought these upside calls, it's 30,000, 20,000, and the dealers have now bought stock to sort of protect, and maybe they're buying some shorter calls and whatnot, but they bought some stock. They're long what's called deltas. They're long stock. If it happens in reverse that there's negative news and the stock actually starts going down, then as the dealer, I just have this piece of paper that I sold up here. I actually have real stock here. I have to sell my stock, and I have to get rid of it as fast as I'm getting rid of it. As fast as I'm trying to get it, if it goes up, I'm trying to get rid of it as it goes down. And as I'm trying to get rid of it, presumably there's negative news, then other people are also selling it. And so it's a compound effect. And so that's why, you have to be careful when you're thinking about, oh, this gamma squeeze is going to let it shoot up, because if it fails, and frankly, I don't think 10 million shares in Tesla trades 80 million shares a day, 100 million shares. We could see how many shares a day does Tesla trade? 50 million shares a day. So is 10 million shares going to actually move this, almost $1 trillion company, $700 billion company? Probably not. Probably not. Not sure, but probably not. You need a lot more. So what I'm trying to say is that if you're thinking gamma squeeze, then, as a participant in this market looking at options, you have to also think the flip side. If I fail, what happens? This stock could get drilled. Because everybody's long stock protecting against the thing. And if the stock goes down, then everybody has to sell the stock. Right. So that said, you have to be very careful. You have to be very careful. If you even think the stock can go up to 1,200, then in your mind, you have to start reminding yourself that it could also go down to 400. Okay. We've been saying 400, 500, because that's what the chart looks like. That's what the action is saying. I get that people are buying these calls, but the action is saying that, barring some great news about a battery or something new, something that is unforeseen, possibly, the stock is under a lot of pressure, and the chart doesn't necessarily look that great here. Okay. It's hanging by a thread is what I want to say.
Right.
Okay. And you just have to be careful with these, looking at these gamma squeezes and trying to play the gamma squeeze or staying long because of the gamma squeeze, potential gamma squeeze. One, I don't think there's enough options there to cause that potential gamma squeeze, to cause a huge squeeze. 10 million shares is just not a lot, and that's a full 100 delta when I'm talking about that. But there's still possibility for those shares. They have to be dumped at some point if there's a negative announcement. So I would be very careful. Thinking if that's if your argument is I'm sticking around for the gamma squeeze, I guess I want to make sure that you understand that the gamma squeeze works both ways, because let's think of it like a fight. You hit somebody with a baseball bat and the baseball bat cracks in half, and the guy's still coming at you. You're in trouble. No longer is the guy in trouble. When you had a baseball bat, the guy might have been in trouble. Now you swung and break the bat over his back, and he's like, okay, now I'm going to kill you. You're in trouble. So this is the battle here. You've got to be very careful when you start thinking about gamma squeezes as very positive. It could also be the thing that causes a meltdown, because me as a market maker, I don't need those. If it's not going at 900, I'm going to puke it on the way down.
Right.
Okay.
Cool.
Keep that in mind. Tesla, again, I'm not trying to say that it's definitely going to 500, 400. I'm telling you that the probability of it going to 400, 500 is a lot higher than people think. I would say that's what I think. And I think that we're one bad news away from the stock getting there very quickly, which would cause a lot of trouble for people who are short puts, who've been playing this, short call, short put game for a while. You can give back a lot in a second. And call it the trading gods. They might let you win for 10 years on a trade, but at some point they put pressure on you. They can wipe out 10 years trades in a nanosecond. So we want to be careful. We just want to be careful there. The last thing I would say about Tesla is a lot of it the story hinges on China. There's been a lot of negative news there, or potentially negative. We had an ARK analyst. When we talk about Tesla, you got to talk about ARK. We had an ARK analyst saying that the government just issued more or extended the subsidies for EV cars below a certain dollar amount, and except if they were buying a battery swapping system. So that basically helps a company like NIO, who has a battery swapping system, and maybe potentially hurts Tesla. But I go back to that same thing we were talking about earlier about US versus China, and it hinges on Tesla doing really well in China. And why would China want Tesla to be the best car company in China? It does. If you believe that, great. I'm not saying. For me, it's a hard sell. Why would they want? They would want NIO or Li or XPEV. They would want one of their own homegrown companies to become the world leader in cars, whatever that is. So maybe long term, that's the argument for one of these three. And so maybe you buy all three and just say, all right, I'm gonna buy NIO, XPEV, and Li, and I'm just gonna leave it. Spend 10 grand, 3,300 on each, and at the end, maybe two end up doing just flat for 5 years, and one explodes to become whatever it's going to become. So, that's the way I would think about playing these EVs, as a package, not just trying to pick the one that you think, although NIO seems like the one that they're leaning towards. Yeah. But again, I don't know how this game plays out. We're just, again, chess pieces moving it around. That's what I'm thinking about. What else? What else are we looking at?
Why don't we jump into some gaming? I'm seeing some stuff happening in June in terms of expirations, so we should take a look at it.
Which one?
What was one? LVS, MLCO.
Las Vegas Sands.
Yep. Okay,
Las Vegas Sands. Okay, so let's look at Las Vegas Sands. Las Vegas Sands. Well, there was numbers that came out a week. So China had their Golden Week last week, and they had a Golden Week back in February, early February. Numbers came out, and they were actually, decent for what it is, right? Good for what it is. They're seeing some growth. China's still way behind the curve here. They're in a bubble. Okay, so China has put themselves in a bubble, and they're not really allowing anyone outside of this bubble to come into Macau. Okay, that's essentially the story.
Right.
Okay, when they open up that bubble to different pockets, Hong Kong, a little bit more, maybe Singapore, outside, the outside world, you're going to see these things potentially explode. This is just one step in probably a long-term process, but the fact that you're seeing Las Vegas Sands calls, I see here the June 4th, which is odd here. So what are they doing? This is the June 63 down to the 60s.
Yep, looks like
47. June 4th, 63 down to this. I have to look at these. I thought maybe these were, yeah, maybe they were a buy. I thought they might have even been a sale, but it looks like this might have come in for sale here, 60 cents to buy the 60s. 147, 159, and delta positive. Okay, so it looks, so the clues are, let's go through the clues. The clues are implied volatility in here is up a little bit and 36.6. The other clue is that we don't see a bid offer here. We do see that when they bought it at 935, the stock sort of jumped up here and eventually went up until about 1020. So this is possible. That's a couple of clues. But then the other clue is that we see this one trade at closer to, it opened up at 66 cents and traded down on the bid at 60 cents. So that's the probably bigger clue on the spread, where one trades on the bid with a lower IV and out of the two. So again, I'm gonna look at this one again, but I thought this was a sale, but it looks like in turn it might have been a buy. So this is someone buying the 60-63 call spread. I guess what the other clue that I'm seeing from this is, why June 4th? Like why? Like what's up with June 4th? And I guess I would ask all of us to look, like, tell me a reason why would somebody come in and buy June 4th options? But they did nonetheless. They also looks here, the June 18s, 14,000 on the 60s. This looks more like a sale here. So look at 1031, 1036, it trades 207, 201, 498, or 198, 4,000 times on the bid. Vols are coming in. So this looks like a sale. So it looks like somebody, this is a little bit later, but someone rolled down their Junes and then sold out their June 18th. So they have a decent sized bet here on June 4th. I have no idea why June 4th is a big date, but that's a clue for sure that we should try to figure out why June 4th. It's something that you'd have to dig a little bit, go through the earning transcript, see what's happening. Why June 4th? Is there more numbers coming out of Macau? Las Vegas Sands is more a Macau name now than anything else, right? More in in the Eastern Hemisphere, because they sold out the Las Vegas properties. And so, this is up on decent news out of Macau, and MLCO is up on also decent news. I didn't see this. So the June, let's see what this is. June, okay, 1025, 45 cents, 52 cents, 50. So this is a buy as well. Volatility moving up and volatility a little bit higher. So you could see that they were buying. The first lot that they bought, the stock jumped up, volatility jumped up. Then they came in and bought more, volatility's jumped up, and now it's just been coming back to where it started. But stock has moved up. So this was a buy. Again, Macau numbers okay. Same story. I think it's important just to see that something like, if the story is good, this jumped from 15 to 24. It now came back from 23.5 down to, call it 17.5. It's about a 60%. This is like a Fibonacci retracement here. So we can look at the bigger screen and let's look at this. Las Vegas Sands. I'm going to push it out a little bit. So let's show you here. Okay, so Las Vegas Sands, and we want 1 year, 6 months. Let's just do that. Okay, so from here to here, you can use so again, Fibonacci, and you can say, where's the Fibonacci retracement? So you can simply say, what am I looking at here? This is Las Vegas Sands. I need, you can do that one as well, but we're looking at MLCO, sorry. So MLCO, we have here, all right, move up, but let's look at, we want the Fibonacci retracement. Okay, so 50% is the first. Usually, these are the retracements that they usually look at: 38%, 50%, 61.2. The 200-day is here. It's not great that the 50-day is moving down, but I suspect that this is, I think, a little bit. It's going to need a couple of months to kind of play itself out. And what you're looking at is for China to open this bubble, let people in. There should be this huge demand and rush from the population to go gamble. That's what they like doing on their pastime, and they flood Macau, and Macau's just not really open right now. So that's what that's the bet. I think that we've seen. I'll tell you what, we've seen big call buying in LCO call. We've been seeing big call buying in MLCO Resort over the last couple of months. And it started with the big move that we saw here. I think it's a good risk reward to say, look, I can buy something, that's given. Let's do it again. Given the move that it had, so we're at 1860, and it didn't even open, and people got so excited that it jumped from 15 to 23.5. When it does open, what happens to the stock? Like when the numbers do start coming in, and eventually they will. If it takes longer than a year, then these options today are not going to work. But at some point it will, and you're waiting to get that excitement back in where things open up, and you'll see a stock, a stock that can move a hell of a lot. Okay.
Cool.
All right. That leads us to one last thing I would say about these names. So you're seeing LVS, you're seeing MLCO, which is a little bit more of gaming names, but they have casinos. We've talked. We don't have to talk too much about it, and bring you back to something that has it's 20 times 15. Now it's probably 15 times earnings, times revenues. It's still an expensive stock, but when stocks do this, like a Peloton, I would say that, it probably takes a breather from going down. I'm not saying it goes straight back up, but, we had this year before 74 to 54, which is 16 from about 62 is 48. 16, no, sorry, is 16 from 62 is how much? 46, which is right around here. So we're right at this sort of level, 74 to 54. Sorry, this was 74 to 20. My eyes were going against me here. 64 to 54 is 20. 61 and a half, less 20 gets you to 61 and a half. Our first stop here was about 40, 50 to 48 is where we were thinking, because of the 200-day. It's kind of gotten through here. I don't know you're trying to squeeze the last piece of the lemon juice here to get the 42, but usually what happens is it makes a move like this. Usually the 200-day is a little bit of a magnet. So I would suspect that you could actually, the selling would stop a little bit. You might see some buyers here. I wouldn't buy it because it's just too expensive in this type of tape. But you could see, if you're playing this game, you could see a buyback to 50. I would also say that in something like Draftkings, I was looking at it earlier. I think once these things start breaking down, again, it becomes this issue of where do I catch the bottom? And I was looking at something and saying, all right, here's August options. And you can buy the August, if you just want something to hang your hat on and say, okay, let me get out of the stock. Let me just buy something for 3 months and I look at it. The 50/60s are, $2.20, right around $2.15. So call it $2.15 to be valued at most 10. If you're bullish on DraftKings and you think, okay, I think it can catch a bid here and get back here if the market moves back up. Well, you could pay $2 to almost $2 to pay to make $8. So it's 4-1 on a call spread instead of holding a stock that I can make an argument trades 34 or even 27. Why and why not? Why can't it go back to 20? Why not? Because people think that it's the story's intact. Look, the story is a story. At the end of the day, a stock is a stock. They're people are learning very quickly that they have two separate things in the near term. In the long term, Draftkings might be $1,000 stocks for all I know. I don't have an idea about what it's going to be in 20 years. But I'm telling you, in the short term, the stock and the story are two separate things. And it's important to recognize that. So when you say that it can't go to 2027, you got to ask yourself, why couldn't it go to 27? Why couldn't it? There's no rhyme or reason to hold something up or whatever. It can also go to 80. I'm not saying it can, but right now it's under a lot of pressure. I do think it's like a Peloton. We just switching one last time to, you can look at Penn Gaming as well. I won't do that because it's a very similar story. But if you look at Peloton, we talked about the earnings. We talked about what we thought after the earnings. After the earnings, like I said, I think has a big move like this, where it's down. Could it trade here? Sure. We were saying that it's more likely that it trades around here for a while because a lot of people are now long options. They're hoping for a big move, a bigger move down. You might not get that move. This was a large move from 125 to 80. That's 45 points. It's got to be digested, and it broke through the 200-day, the 50-day. So, you're going to want to, I think at start getting to 100, you start getting more sellers here and people shorten it. But, this range right here, remember the market and the options market is it's designed almost to hurt the most people at any moment in time.
Yep.
It's always, you got to think and rethink what the situation is. In this case, there's a lot of people now looking at Peloton thinking it's going lower. Some people saying it's going higher. The reality is that it probably just stays around where it is for a while, tires everybody out. The option premiums go down, and then it finds its way, and then you get another move up or shoot up higher. That's usually the way it goes, and that's why we're sort of thinking that 75, 95 range, which if it's in that range, it becomes very difficult to make money trading options.
Right, up and down. Yep.
DraftKings might be in that range a little bit for the next, call it 40 to 55. I don't know. So right around there, it becomes, when you're paying $4 for an option for 2 months, how are you going to make money between, a 15-point range and it's $7.50 up and down? It becomes much more difficult. So that's what I would say. That's the casino names. Maybe it's a little bit of China doing a little bit better. And remember, when people, I want to make sure people fully understand that, when there's an analyst has a book, there's guys that just trade the casino names, or an analyst just has the casino names. So he's looking at all the casino names, say BlackRock, and they have money on online gaming, and maybe they've been shifting money towards the other casinos. So maybe they are now moving towards, okay, we took all the money we could out of online gaming. We got some money into Las Vegas Sands and Wynn, and, but we want to start putting more money into China and the Macau opening, which that's next. That's how these guys think. They're looking in front of them saying, where's the movement? Because a guy who is long DraftKings and Penn, he can't get out and go buy Amazon and go buy basically he has to buy something within the online gaming. Now he can go buy bonds, he can buy other things, but he's got to buy equities within the online gaming. So it's a shift of dollars to something else. And that's what you're trying to look at within the online gaming. Is that fair?
Cool. Yeah. Awesome.
All right, good.
Great. I love it.
Good.
Love it.
What else?
Okay. Here's a comment regarding the June. Looks like there's in Macau, there's some event that so that's probably
technology event loosely modeled on the massive scale. That's good. Okay, so maybe people are playing something like that. Maybe, in something like that. Remember, go look at the LVS, go look at the LVS transcript, and they want to get into online gaming. And, they're not going to tell you when that's going to happen, but they're salivating. You just go look at the earnings transcript. It's asked them a couple of times, and you can tell that the guy wants to say, like, we're in, like, we're what, right. He has to say what a good CEO says. Remember, what's the guy's name? Sandy Adelson didn't like the online. He liked the casinos. He passes away, RIP. But now his new executives, they are, chomping at the bit. They see where the market's going. It's obviously younger guys. And so you might, I don't know. I don't know why June 4th, but that sounds pretty interesting about the that event. So yeah, so we're always looking for that type of stuff. So that's something to look into. Good.
Cool. Great.
What else?
Why don't we finish off strong with Palantir? We covered it last week, but there's also earnings coming up tomorrow, so we should
Good.
definitely take a look at it. Yeah.
All right, Palantir. Let's go quickly on Palantir because I know that that earnings are there, and I know that a lot of people are playing this name. We've been trying to warn people. I'm not saying long term, short. I'm not saying long term. This isn't a good stock. I love the stock. We've been liking the stock back here. Saying like AI, and they're in the right business. I'll tell you that much. They're definitely in the right business where, they can help companies. They can help. To be a customer of Palantir, you got to pay $5 million or something like that. So they're in the big boy business, and they help companies. They help companies with their AI product. And I don't know if they're software consulting. I don't know exactly what you want to call them, but they got a good product. Yep. Now, the question is stock price. And I think that the one thing we've noticed and we talked about here is, this is obviously a big level, 21, breaks that level. Remember, look, let's just look. I mean, visually, let's look here. It's like, these are sharp rejections, right? You see the rejection. I'm not making it up. I'm just trying to show you visually what to look at. Yep. You're looking at pretty sharp rejections off of this 21. And then you see this, and we could see 21 has been the level since here, okay? Since April. So you can just connect the dots. You have here, here, here. And this is where at April you just say, oh, wow, okay, so 21's level. Bounces through, comes back. Again, holds. You're looking at the same thing here at 21, and you got to just keep. By the way, they're doing the same thing here, and we were doing it. This is the level. If it breaks 21, okay, that is telling you that the buyers who are here and here and supporting this thing the whole way have stepped aside. That's a clue. That is a technical clue that says to you something is changing here versus what's happened here. It's very simple. This isn't rocket science. Okay. Yep. The stock breaks 21, and you should expect weakness. Okay. And you see the volume pick up 1, 2, 3 bars. Volume is picking up. We're trying to show people that these levels, okay, this is the risk reward. This is the level where you're going to be looking at. And when it breaks that, let's see, where could it go? Someone says, where could it go? Well, where was the last time once it broke here? Where was the last time the volume? You could see the volume is right here. Mm-hmm. This is really where the volume is. And where the volume started really was $10. Yep. Okay. Now, when this thing came IPO'd, let me use this for now. When this thing went IPO'd, it was right around this level, and nobody cared. See, came out. I think it was a direct close. It was IPO. Nobody cared here. Yep. Palantir, nobody cared. Nobody wanted to touch it. Soros was saying he was going to sell it and whatnot, but stock took off. Okay. And there wasn't a lot of days here. We're talking about it went from 10 to 33 in a matter of 3.5 weeks. So in a matter of 3.5 weeks, it went from 10 to 35 to 33. Okay. From 10 to 15, it took 6 days. And from 15 to 20, it took another 4 days. In 10 days, it went from 10 to 20. Okay. This is significant. This right here is what you want to look at, because when it breaks this, why can't it go back to $11? Now, more of the story has gotten out. There's more people that are willing to say, I love this stock long term. Okay. They have the United States government as their customer. They have a great product. They have great management in Peter Thiel. They have a good story. They also have a lot of stock that's out there that people were buying puts because they owned a ton of stock. There's a lot of people that, the Soroses of the world and big hedge funds that own stock, and they were buying the 25 puts, which we saw all the way back here. They were buying the 25 puts for June. And you could see the puts, and they were paying, when it was 25, they're paying like $3, $4, which in June at this time, and you could see the videos. You go watch the videos to see what we're saying, why I was saying what I was saying. It's not like I'm a magician. I'm just trying to tell you that if someone is paying $3 to $4 for the 25 puts out to June, then they are thinking closer to 15, closer to this area right here, 15, 13 to 15. Somewhere around here, if they're spending $4 when the stock is trading around 27. So the point that I'm trying to make is that when we're looking at this stuff, it's important to sort of heed the warning signs of what people are doing, the big money, the flows, because they're the ones that control these stocks. It's not even the hedge funds. It's the biggest money. It's the big money, the BlackRocks. Okay, the hedge funds are there like feeding off of these guys and trying to figure it out. They're also doing a lot of work. I don't want to diminish what the hedge funds do, but at the end of the day, if BlackRock is selling the stock's going down, likely. Right? Likely more 70% of the time when BlackRock is buying stock, it's going up. When BlackRock is selling the stock in a big way, they're going down. That's just the way the world works. So, you have this level here. Can it trade down? Yeah, I mean, it could trade down. You're looking at a lot of volume here and just volume starting to pick up here where people are getting out. I would say to be careful here. But one thing to look at, I had looked at something here today. Yes, let's look at this. So I'm looking at Palantir just to offer you something to how to think about it, or a way to think about it. So I looked at, okay, so you're long the stock. Okay, granted, I get this a lot. I'm long the stock, and the stock's 1858, and I'm thinking, I don't want to let go of the stock because I've just been down. I'm down. I don't know. Some people down $5, some people down 10, some people down $20. So what do I do? Well, I'm telling you that there's an actual possibility that the stock trades $11. Just because. Remember, I think all the stocks are going to 10, but in the next 2-3 weeks, this stock could come off, and it come off in a hard way, depending on what earnings say. It could also go up back to $30. So what do we do? So we're in a tight spot. The 21 is that level, and I was looking at here. I thought of the instead of having to stare at the stock all day, every day, because you're under pressure because the stock is down. One thing I tell people is, why not just take a break for a second? You don't have to release like the exposure to the stock, but you take a break and you say, how about the 1929 call spread, 1929 call spread for $1.90, call it $1.85, right? 208 and 55 is how much? So $1.92. So $1.92. Is that right? That doesn't say.
$1.50.
Yeah, $1.90.
Wait.
No, $1.90. Sorry. I'm completely. Yeah, $1.51. Sorry.
Yep.
I'm looking at a different one. Okay, so my eyes are going bad. 208 and what do we say? 55 cents? Yeah, so $1.53. Let's call it $1.50. Okay. $1.50 for a 20-30 call spread, and you don't have to look. And if you're right and the thing goes to 30, you're making, what's that? $1.50 is 8.5. So 6, 5, call it 5 and 533, 533% up through 30, 5.3 times your money. Like, to me, that just sounds easier on the mind. Forget about anything else. Like, just, I could spend $1.50 and I get a look for the next May, June, July, August, and you're actually going to get another August earnings here. I'd rather do that every day than sit here and wonder whether or not the stock is going to break and hit 11 to 15, or we're actually going to go up to 30. Just stick me in a trade where, yeah, if we get back through this 21, I'm in, and I don't have to look, and I don't have to actually, really just concentrate on what the earnings are, what they're going to be. It's just here. I'm buying myself 3 months to take a breather and to say I can only lose $1.50. That's how I would, when people ask me for my help in a situation. By the way, usually they have one stock that they've done. I'll say it again, that they've done a wheel in, or they've done something where they've caught. Okay, they left holding the bag, or whatever you want to call it, and it, they have $300,000, and one stock is like $150,000. And I say one stock is, your portfolio is basically one stock. No, it doesn't matter what the 10 of the stocks do. It's really one stock. And they say, yeah, how do I get out of it? And the bad news is there is no how do you get out of it. You're in it. So how do you get out of it is by trying to manage, what you have, take it out. You're not like going out completely, but you're going to sit down and watch, and you're not going to look at it for a while. And it's not going to matter if it goes to 10 or 11, because if it goes to 10 or 11, you're going to be in shambles, right? That's what I tell you. You're going to be in shambles. I don't know if maybe it's only 5% chance, 10% chance, but there's definitely a chance. And I'm showing it to you visually. And yes, it could go to 30, and at 30, you're going to be very excited. But there's a middle ground where, how are you going to feel? And if it goes down to 11, will you sell it? And then 2 years later, it goes to 30, and will you just be forever out of the market because you never want to play. These are the types of things that you got to protect. I always say protect the mind, protect what's between your ears. So that's a trade that if you're in Palantir prior to the number here, they have the calls. The upside calls are better bid. So we're taking advantage of that. You get to do this 10-point call spread for $1.50. It almost sounds ridiculous. So I want to go back and look at it again. Palantir 1929 for $1.50. Yeah. I think that's an interesting trade. Okay.
Love it.
My man, Monday, it was a pleasure to see you again.
Thank you.
Everybody else, thank you again for subscribing and for supporting us. We appreciate. I do my best to answer all the questions, so please put them on the comment section if you can, and that's where we're taking a lot of these questions as well. So if we forget one, we don't put it on there, then you could put it on the comment section and just be nice.
Yes.
Nice and
Rule
clean and
number
respectful.
one. Yep.
Rule number one.
Thank you, Felix.
All right.
Thanks,
All right, be
guys.
good,
Help
guys.
us out, spread the message, and we'll see you tomorrow.
Be good.